When the stock market melted down in the fourth quarter, the price of oil plummeted from $76 in early October down to $42 at its lowest near Christmas. Since then, crude has rebounded $52 a barrel, but lots of investors are nervous that this weakness is very strong evidence that we're seeing some sort of slowdown in the global economy. That's why the S&P 500 always seems to get hit on days like today, where the price of oil goes down. It gave up $1.50 today alone. Now, whenever I want to get a clear read on oil and gas, I always check in with Rusty Brazil. He's president and principal energy markets consultant for RBN Energy, because he has such an incredible track record, and because, geez, is he ever readable. I read him every morning, as he knows, because I sent him an email almost all of him. Rusty, welcome back to Mad Money. Good to see you, sir. Have a seat.
Good to see you. Thanks.
I cannot emphasize enough to people that if you want, and you've got a website so people can read some of the things that you do.
It's free.
Right? It's free. And you'd be nuts not to do it, because you've had a tremendous call for years and years now. So let's start with the news that we just had happen. We saw the Treasury Secretary talk about not remitting the proceeds for Venezuela. Does it really matter anymore? Venezuela, you taught me, used to be the biggest, and now it is very little.
It's small. We're only getting maybe 500, 600,000 barrels a day from Venezuela. So it's not a big deal. It is a specific kind of very heavy, very high sulfur crude oil. And if it were to disappear, it wouldn't be a good thing for the refineries that run it. The Valeros, the Chevrons, those sorts of refineries, they would have a problem making up for that kind of crude. But in the big scheme of life, let's face it, the Permian alone grew by 1 million barrels a day last year. So that is more than twice what we're getting from Venezuela now. So in the big scheme of life, it's not a huge deal.
Okay, now you have followed the U.S. and what it's done. You predicted quite well. I've often gone back to how important is Saudi Arabia in an era when we keep adding and adding, and you're not saying that we're going to necessarily stop adding.
No, we are going to keep adding, even though we're probably going to add less than we did last year. But Saudi Arabia basically has one tool, one weapon, and that is to reduce production. Right. So they have the ability to basically forgo market share to U.S. producers. Gee, that doesn't sound like a really powerful weapon, does it?
No, it doesn't. No. Okay. And tell me why nat gas has been all over the place, because it's very hard to figure. You know, we had huge frigid temperatures last week. We had frigid temperatures coming up this weekend. Yeah. It's plummeted.
Yeah, so I guess gas prices were off like 25, 26 cents a day. So supply demand are basically at balance in the United States. So that means that any little thing that hiccups can push natural gas prices big time one way or the other. So we entered this heating season with very low natural gas inventories. Why were inventories low? Well, partially because of weather. That's one thing that always happens. But also we're exporting a lot more natural gas right now, 5 BCF a day in the form of liquefied natural gas, LNG, and 5 BCF a day to Mexico. 10 BCF a day is going out of the country, plus the fact that we had some weather. And then something else was going on, too. We actually saw higher use of natural gas by the power generation segment per degree day. In other words, for a given temperature, we're using more natural gas in 2018 than we did in 2017 and years before.
Right, and some of this is renewables are good, but when it's not sunny, they got to do something.
That's pretty much it. So we are using more renewables. Renewables are really gaining market share. Right. That's a wonderful thing. Whenever renewables gain market share, they're going to push something else out, right? So what's it going to be? Well, renewables are an intermittent source. So that means sometimes the sun doesn't shine, sometimes the wind doesn't blow. And when that happens, you don't go flip on a big coal-fired generation plant. It takes 3 days for the thing to heat up, 3 days for the thing to cool down. No, you turn around and flip on a gas-fired peaker. Gas demand goes up, and therefore we've actually seen total gas demand increase. That's put supply demand at this knife edge point. And so every time it gets cold, then you see gas prices go to the moon. And what happened over the last couple of days is the 2-week forecasts came out saying that we're going to have mild weather, not today, not tomorrow, but coming up. And because of the market's always anticipating, that meant the prices just got hammered today.
All right, now when oil spiked up, you told me that the futures curve indicated that this may not last. What is the future curve saying right now?
Exactly what it said before, or
really?
Almost exactly.
The whole way?
Yeah. So when crude oil prices, let's say you were talking about crude oil prices?
Yes, crude oil.
Crude oil prices. So when crude oil prices got up to $72 in October, the crude oil forward price in 2023, 2024 was at 58, 57 or so. So the futures price never jumped up into the 70s. Then, as prices for crude oil fell from 72 down to wherever they are today, 52 or so, down by 20 bucks, all that happened to the price in the future was it's down about $4 or $5, down to 52, 53 or so. So in other words, the market has recognized that it was never going to be 70. It was never going to be 40, 42. It's going to be bouncing back and forth between some number around 55
and
or
I
60.
did credit you when it was at 70. I said it's going lower, and that was Rusty's work, who said this is unrealistic. Last thing. Every morning I wake up or in the middle of the night, I see oil down, and then I hear, well, listen, oil's down because of weakness in China. Now, that is a newsletter headline. Does it make sense?
Sort of.
Really?
Yeah, because natural gas production is going to be determined by crude oil prices, right? So if demand in China is down, if the economy in China's demand is down, that means the total demand for crude oil is going to be down. If crude oil demand drops, then total demand drops, then natural gas prices or crude oil prices are likely to decline too.
So the linkage is not insane.
No, it's not insane. As a matter of fact, that's really the most important thing that's going on right now, and it's what happened back in 2014. In 2014, the economy got weaker, and when that happened, the market lost confidence in its ability to absorb incremental production of crude oil from the United States. That's exactly what happened in October.
Wow. Okay, this is Rusty Brazilis, the president and CEO of RBN Energy. Thank you, Rusty. Remember, when it was at 70, he said go. I credit him, but I sure did do it on our show. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.